As everyone knew, Nifty is already skyrocketing. It already crossed 17,300. The question is how Nifty is going to perform on this way. The momentum of the Nifty will continue or it's going to be a flat reversal market. What kind of the option strategy we can use for this week? For all your questions, I'm going to answer it in this video. My name is Shiva Gurunathan. I'm going to with you for next 15 minutes. This is the D Street School where you can learn and earn. First, we will start with the Nifty historical volatility analysis. The last close of Nifty is 17,323. Here is the historical volatility level. I named it as a R1 and R2, S1 and S2. This is not a typical support and resistance. Actually, this is a standard deviation. As like R1 and S1 is a standard deviation 1, R2 and S2 is a standard deviation 2. In order to understand easily, I named it as a R1 and S1. The big question is how we go and interpret this data. Let me explain you in simple language. This is R1 and this is S1. So how we can understand is, I can tell you at the 68% confidently Nifty will trade between this range from 17,089 to 17,797. So I can tell you 68% Nifty will trade within this range. But still there is a chance remaining 32% Nifty might trade outside of this range, either upside or downside. In case if you are not comfortable with the standard deviation 1, you can go and opt for standard deviation 2, which is I can tell you 95% confident Nifty will trade between 16,745 to 18,162. So remaining very few chance, 5% chances will be there. Nifty might trade outside of this range, either upside or downside. But I would strongly recommend you initially you can go and start with the standard deviation 1. So then you can go for standard deviation 2, because standard deviation 2 is a very huge variance. So you can see almost more than 1,300 points. There is a very few chances are there Nifty goes 1,300 points within the 4 days of trading period. So that's the reason I would recommend you to go and stick with standard deviation 1. So these are the option chain levels where you can see the nearest resistance is 17,500. So the current market price is 17,323. So the nearest resistance we can see 17,500. So where the market is likely to reverse. So these are this level, and then we will go on to analyze the technical part. So how Nifty is going to be on next week. Is it going to be a bullish or bearish? We'll go and figure out by using candlestick chart. So what you are seeing on the screen is a daily chart of Nifty. It's a very long bull run, you can see. So on recent days, you can also see last 5 trading session. It's also be a bullish signals. You can see a lot of green candle appear on the chart. And on last trading session on Friday, you could see there will be still we have a buying pressure near the 4 days moving average. Here I have used a 3 moving average. One is the 4 days moving average, another one is the 23 days moving average. The last one is 50 days moving average. You could see Nifty was taken support at the 4 days moving average on previous session. So what I come to the conclusion, if I can expect Nifty will go till 17,500. So where I see the resistance level. So let us see how far Nifty will go. You can also see the ADX level where the momentum is in peak. So we can expect momentum might slow down on upcoming days, but still it has not reduced. Still, it has a good momentum, but we can expect on upcoming days. And you can also see RSI; it's in a overbought region. So once the price reaches 17,500, we can expect small correction on the particular area. So let's see, let's wait and see how Nifty is going to perform on upcoming days. So these are my views. By doing this analysis, I came to the conclusion. So Nifty is going to be a moderate bullish. So what kind of option strategy I opt for? Because I know I come to the conclusion Nifty is going to be moderate bullish. So what would be the best option strategy? We'll go and figure it out now. Here I opt for bull call spread option strategy since I have a moderate bullish view. So if our market view is moderate bullish, you can opt for bull call spread. So if market favors us, our profit will be fixed. So even though if Nifty moved 1000 point or 2000 point, we will be capped with fixed profit. If in case market reversed, our loss also be limited. Okay, so that's a very best part in this strategy. So our loss also will be limited and our profit will be fixed. So this is the thought process behind the bull call spread. So that's the reason I opt for this strategy for this market situation for Nifty. So this is a two-leg strategy. We can you can opt for long and short call. So both the call I opted for out the money range. For long call I opt for out the money, and for short call I opt for deep out the money. So this is a theoretical concept. Let me go on to explain how I customize this strategy. At what level I initiate this strategy. As I said before, this is the last close would be 17,323, and the expiry date of the contract would be 9th September, which means still we have 4 days to go. And the PCR ratio, puts are more than calls. So I am anticipating market will move further, and expected volatility for next 4 days would be 2%. So it's a normal volatility, so that we will mark that the reason I opt for this strategy since I have a moderate bullish view. So first I initiated the long call one quantity at the strike price of 17,350. Our moneyness would be OTM. It's not a deep OTM, it's OTM. And by paying the premium of 87 rupees 15 paise. So the target date would be 4 rupees. So and again I initiate the short call the strike price of 17,550, which is a deep OTM. So by receiving the premium of 26 rupees 70 paise, the net amount is going to be 60 rupees 45 paise. So this is a break even point 17,410. When market moves above this range, we will start booking profit. So the maximum loss would be 60 rupees 45 paise on premium, 3,022 rupees on total amount. So the maximum profit would be 139 rupees 35 paise on premium. Sorry, 139 rupees 55 paise on premium, and 6,977 rupees. So our target would be 17,550. By using this strategy, our profit will be limited with the maximum of 6,977, and our loss will be capped with a maximum of 3,022. So this is the strategy I customized for the Nifty. Since I have a moderate bullish view, I opt for bull call spread. So this is the payoff chart you can see for Nifty. See, you can see the limited loss at this level, and the profit will be capped at this level. This is what I wanted to explain. I'm sure you will have a better understanding on it. If you do have any doubts, don't hesitate. Please leave your comment in the comment section. I'm glad to clarify your doubts. If you like this video, if you feel in any way it will be benefited for you, and if you think you can make a money on market by using my strategy, please do like my video and subscribe my channel, so that that will encourage me to put more videos. So thank you guys. I will see you on next video.